Are you worried about what this is all doing for the Federal Reserve? We are expecting the Federal Reserve to raise interest rates perhaps 3 times this year. What's the impact?
I think, Maria, we're just returning to normality. You know, it used to be when Treasury bills were 2.5%, 3%. We're still a long ways from normality. And so what we went through in 2009 and 10 and all that was not a very pretty picture. And so the Fed did the right thing. They brought rates down, for sure, and increased money supply. And now we're just turning back. We're finally turning back to a normal economy, which I think is fantastic.
So the Fed has to unwind this balance sheet, $4.5 trillion. Yeah. Is that going to be an issue, do you think?
I think it's just maybe some impact on longer-term rates, although longer-term rates are pretty darn low as it is.
Too,
yeah,
right.
They're very low. So I think we have plenty of running room, plenty of natural movement that will let the Fed do what they need to do. It's all in the pathway to return to a normal economic situation. And I'm really happy about that.
People think 4% economic growth is doable.
I think it's clearly on the plate. I mean, I see our own company, how fast we're growing, way substantially ahead of the 4%. But when you take collectively all the various companies in America, I think the opportunity for 3 to 4 is very, very good. And it could be slightly more than 4, maybe in a year or so.
So as a manager, what are you seeing in terms of the labor market? I mean, you know, we saw a wage number that was concerning in January, 2.9% growth, but then in February it was 2.6% growth. How tight is this labor market? What do you see in terms of
Well, it's not as tight as you think. If you really look at the real unemployment number, it's probably closer to 8%. The participation rate went from here way down to 62%.
That's right.
I think there'll be a huge amount of people that will return to the marketplace as we bring some of the people that are a little bit older. We want them to come back in the marketplace. And we have some ideas on maybe getting Social Security costs down. So if you're 65, we can have that go down to 0. So the next period from 65 to 70 or 75, you could work without paying off the balances that you had in Social Security. So you'll be able to save more money, make more money, and it's a nice incentive for more people to participate in the economy.
Well, you make really good points. The participation rate improved last month.
Yep.
It basically said that people had the confidence to go out and look for a job.
Absolutely.
And
a good job. And a good job.
And a good job, high-paying jobs.
Right.
Yeah, and then you also mentioned that we're seeing the participation rate do well, but also the labor force doing well because there are higher-paying jobs.
Exactly, and it all works together, and that's what a robust economy really means.
What's your take on the trade story? So the president is getting pushback on these tariffs on aluminum and steel.
My view is that I think he has to establish some negotiating points, and I think when you look at China, for instance, taken over the steel manufacturing. They do 50, 60% of the world steel's manufacturing. America has gone from very high down to maybe we do one-tenth of what China creates. So China is selling to Canada, to Mexico, and so forth, and we have to have a steel manufacturing capability. I mean, just for strategy alone, if we ever get into any kind of a fight, and we've been there before, we need to have this capability. So I think, you know, China is really not free trade in so many different aspects, and most countries are not free trade. We love free trade, but it's basically has to be fair trade.
Right.
And so he's doing some right things, I think, creating negotiating points that maybe we can get some things done and make it a fairer environment.
Yeah, because the Wall Street Journal op-ed page was pretty hard on him.
They're very hard on him, but I think when they really look at how the other countries treat us, they've taken advantage of it. And I totally agree with the viewpoint of the administration.
So do you still believe that over the long term, the stock market is the best way to create wealth?
Yes, and the reason is this. It's the only place I can point to that has continuous growth. When a company, look at, for instance, Apple. It's a perfect example. Started with one little device. It grew to 2, 3. It grew, and all these thousands of things have flourished. Apple has flourished. So it grew every year, over 20, 25 years. Same with, let's say, McDonald's. Started with one hamburger shop. 2, 4, 8, 10. That's called growth, compound growth. That's what you want to look for. And the only place you can get that is really in the stock market. If you buy a building, for instance, the building will be their same building 50 years from now. Yeah, the rent might have gone up, but it's not going to become 2 buildings. Not going to be 3 buildings.
Good point.
But a company can grow and grow and become much bigger on a compounded way.
I love it. That's a great analysis. Chuck, it's good to see you.
Thank you.
Thank you so much for joining us. Charles Schwab, founder of the Charles Schwab Corporation.